Alright, you guys, it's that time again. It's time to tackle the trade. We're going to start out today with the Yahoo financial calendar at www, of course, finance.yahoo.com. And it's very wise as a trader / investor to check up on the market's events, the economic events. And this week there is a major event. It happens the first Friday of every month. It's called the Non Farms Payroll. And it's essentially the jobs report. And that is coming out tomorrow morning at 8:30 a.m. And we are going to be learning about the unemployment rate. And Non Farms Payroll tracks payroll reports for non-agricultural businesses. And we can see that the last time the market reported 9.7% unemployment. The forecast was for 9.8%, but the reality is they've updated the forecast and they're thinking it's going to come in at 10%. Now, this number creates an expectation. And it really comes down to how the actual report comes out compared to the expectation. It's kind of like opening up a Christmas present on Christmas morning. Your expectations really can dictate how you feel about the surprise. I also noticed that we're seeing a steady decline in the actual amount. So we're actually seeing people are not only just unemployed, we're seeing a lot of underemployment. And it will be interesting to see how the market responds. Now, we're going to go ahead and move on, and we're going to go ahead and get out of there. And we're going to come in, and I'm going to crack open a chart of the US dollar index, which is DX space #F. Now, there we go. Now, the non-farms payroll report truly affects currencies, and forex and currency traders go nuts on this report. It'll make some crazy moves. And the dollar exhibits some slowing momentum, so we're going to go ahead and kind of point out what we see here. The U.S. dollar has the distance between these peaks. We were making some nice headway in the dollar gains against the 5 major currency pairs, and we're seeing it slow down. It's formed a double top, and we're seeing it break the very first support level right here. And then we notice that this trend has been violated, which is no longer valid, but this trend is still valid. Now, you can see that it closed higher today. The dollar actually put in a good rally. And going into the non-farms payroll, this could really alter the strength of the dollar. So you need to keep an eye on it and understand that it can truly affect the market. We're going to go ahead and take a look at the gold. Is another thing to consider because, of course, the value of the dollar changes. If the dollar drops, gold should continue to rise, and it would be something to pay attention to. But if the dollar rises in value, we could see gold take a drop. So for those of you who are trading and investing in gold, something to keep your eye on. And then last but not least, the market itself. The E-Mini S&P Futures is what we're looking at here, and we can see that the market is short-term range up. And what that means is we've seen this swing range before, and I've done this many, many times with you now. We've seen this swing range here, here, and we are currently up one swing range. Now, there are larger swing ranges, of course, and we could see the market power on through, and that would put you up to this next resistance level. So we're watching the market, and we're going to say, okay, we know we've got a hard major resistance out here. It's currently coming in a little bit underneath that support resistance zone in here, and it's range up and slowing down. But again, tomorrow's news event could entirely change the landscape of the market, and so it's something to pay attention to. We had talked about the slowing momentum pattern on Diamond Offshore, and we had talked about the potential for a bull put spread, and we actually built out the spread and talked about the potential return on investment, and it had a really nice return on investment. And we saw the higher low, and what looked like was forming was a W pattern. Well, that W is turning into a symmetrical triangle, and a symmetrical triangle pattern, let me go ahead and clean these lines up, go ahead and remove the lines for the symbols. And if we were to go draw out what the symmetrical triangle is, it has higher lows, which is consistent with an uptrend, and lower highs, which is consistent with a downtrend. And this is what you call consolidation. Price is quieting down, and consolidation typically leads to breakout. The problem is we don't necessarily know which way. Now, my original estimation was that it was going to break up, but that may not be the case. And if it breaks down, it tends to move about as big as the back end of the triangle. So how technical traders forecast out the symmetrical triangles is they take and draw a second line, and then they go throw it out on the back end, and if it breaks up, you're going to see it probably run up about one swing range out into here, which would put it really darn close to this old support resistance zone, and it would probably get smacked back down. And if it breaks to the downside, which it could, we could see that same angle kind of repeat itself here. So we try to get that parallel angle, and you go drop that symmetrical triangle down here on the back end of the triangle, and if it breaks down, you're looking for that range down. So it's looking at 80. Now we had a bull put spread in 85, sold an 85 put for a bullish move, received the credit, bought an $80 put to protect ourselves, and as long as it stays above support, we're okay. So what we're really hoping for is a breakout. If it starts to run down, my plan is to buy back the sold put, the 85 put, at a loss, and let the purchased put work, because if it runs down towards 80, the purchased put will increase in value and more than compensate for the loss on the put sold. And I have an exit strategy before I get into any trade. It's really important to do that. Now, I have an investment idea for a change, and I'm going to talk to you a little bit about an interesting corporation called MannKind. These guys are a biotechnology firm, and I'm going to crack open their website real quick here. And this little website here, this is MannKind Corporation, and they are developing an insulin delivery system that is an inhaler. And it's estimated that there are over 200 million diabetics in the world. Very interesting delivery system, and it could be huge. Now, again, guaranteed, not a guarantee. They have not yet received FDA approval, but it looks to be like a very interesting product that could be worth a lot of money. And you have to consider that this is a very risky, speculative trade. Now, I'm going to go ahead and talk to you about this particular chart. It's currently going for $10.25, and it is exhibiting a good uptrend here, but it's got a resistance zone that it's hit, and it's not seeming to break that. And this creates a trading pattern frequently referred to as a cup and a handle. And that little cup and handle looks kind of like a teacup. Now, there's some overhead resistance out here at 12. Now, I want to talk to you about possible instruments on that. And again, this is not a recommendation to buy or sell MannKind. I just want to talk to you about the potential. Now, MannKind, you could go buy, and let's just say, for example, you bought 100 shares of the stock at the current price of $10.25. And at $10.25, we would have the potential upside would be huge. So if you own 100 shares of stock at $10.25, every penny it rises above $10.25 is a gain, and any penny or dollar it drops below $10.25 would be a loss. You would be looking at a maximum risk of $1,025. And you could lose every penny of it. If everything went bust and that came out and they don't get FDA approval, you could go bust, and you could see it gap down dramatically, which we have seen it do in the past. Now, if they get FDA approval, the sky's the limit. And that stock, who knows? You could see it run out maybe 20, 22, 30, 50, who knows, if you get that. Now, we like the upside portion of this graph. I don't necessarily like the downside. And you could purchase the stock and have an exit strategy planned, like I mentioned, to put in a stop loss or just to sell to get out if it goes the wrong way and mitigate your losses. But that does not account for a catastrophic gap. And a catastrophic gap, let me pop open the chart of that again, is what happens when bad news comes out, particularly in pharmaceuticals. This is why a lot of people say don't do drugs. There's a big gap. So it was trading at $9.50 one day, and then boom, by the 2 days later it was trading at $6.50, and by the end of like a couple of weeks it was down at $5.50. So it lost almost half of its value, and you'd be pretty upset. You'd be crying in your Cheerios if that happened to you. So I want to talk to you about a long-term equity anticipation, and it's called the LEAP. We could buy one, and I could go clear out to January of 2012, and I could purchase the right to the stock at $10. And it's going to cost me $3.60 per share. Now, an options contract is worth 100 shares, so it's actually $360. But because it's an option, you have the right but not the obligation. Now, there are risks in options, and you need to understand that. But when you purchase a call option, you have a limited risk. You cannot lose more than you spent. So you could limit your risk to $360 on one contract, and the upside potential on this, let me go ahead and hide that, is unlimited because you purchased the right to it at 10, and if that stock runs out, who knows how high, if it runs out to 25, 30, 37, who knows? You could be making large sums of money on that particular little return. If it, became a world beater and was worth 70, 80, $90 a share, you didn't just double your money. You didn't just triple your money. You're sitting on a $6,570 gain. This is not a recommendation to buy or sell mankind. I'm just talking to you about the kind of leverage that you can create and how you can control a lot more stock with less money using options. And then the fun thing about these leaps is you can do other trades against them for exit strategies. You can do other things against them to hedge, or you can write covered calls on them to cash flow the market and things of that nature, which you would need, of course, to study and understand. But I hope you found this informative and interesting, and I will see you all. We'll do a recap tomorrow after that event, and we'll see how it all played out.